Welcome to Bad Debts Explained. In under 2 minutes, we'll break down everything you need to know about bad debts and their impact. Bad debts can significantly impact financial health. Let's start with a clear definition. Bad debts are essentially money owed to your business that you can't collect. Think of it as a debt that's gone sour. For businesses, bad debts mean lost revenue, impacting profitability and cash flow. It's a real financial hit. So how do you spot a bad debt before it becomes a major problem? Bad debts often originate from, quote, uncollectible accounts receivable, meaning customers haven't paid their invoices and are unlikely to. Key signs include consistently past due payments, lack of communication from the customer, or indications of their financial distress. Once identified, how do businesses account for these unrecoverable amounts? The direct write-off method removes the uncollectible amount directly from accounts receivable when it's deemed worthless. The allowance method, more complex, estimates bad debts and sets aside an allowance for them, anticipating future losses. What are the broader implications of bad debts on a company's health? Bad debts reduce assets and profits, directly impacting your balance sheet and income statement. They also hurt cash flow and overall profitability, meaning less money available for operations and growth. The best defense is a good offense. Let's look at prevention strategies. Thorough credit checks on new customers can significantly reduce the risk of future bad debts. Clearly communicating payment terms up front helps set expectations and encourages timely payments. Implement consistent collection strategies, from friendly reminders to more formal actions if needed. In conclusion, understanding and managing bad debts is crucial for any business. The key takeaway is effective risk management. By being proactive, you can minimize the financial hit from bad debts. For more in-depth information, explore resources on accounting principles and financial management. Thanks for watching.